Hey, what's up, my friend? So, in today's episode, I want to talk to you about the truth about scalping, right? That nobody tells you, right? Often you see, videos say, master this one simple chart pattern to be a profitable scalper, right? Simple scalping strategy anyone can adopt, blah, blah, blah. And here's the truth, right? Scalping is not what you think, right? So, first and foremost, what's scalping? Scalping is one of the fastest frequency of trade, right, that a discretionary trader can adopt, right? You're operating usually on the 1 minute time frame, the 3 minutes time frame, right? And even some scalpers I know, right, trading the futures market, they don't even look at charts. They simply look at the order flow of the market, right? They look at how the bids and offers, move up and down, right? And then place trades based on that information, right? So scalping is one of the fastest form of trading, right, for a discretionary trader. And here's the thing, right? Scalping is not what you think, right? And first and foremost, right, let's talk about scalping the market, right, using one pattern, one chart pattern, one strategy. It is difficult, right? If you want to be a professional scalper, right, you can't just rely on one pattern, one strategy. And the reason for this is because market conditions are always changing. Market goes from an uptrend, downtrend range, low volatility environment, high volatility environment, etc. And if you only know one pattern to scalp the markets, right? What if market conditions change, right? Which it does, once every few days, right? If you observe a lower time frame chart, right, the pattern, the market condition, the market structure, it changes, right? Once every few days, or sometimes even faster. So if you only know one pattern, one strategy, it is pretty darn difficult, right, to be a profitable scalper, right? Because market conditions change so quickly. Okay, so that is the truth, right? Number one is that you can't just rely on one pattern, one strategy to trade the markets. You got to adapt, right, as market conditions change, right? For example, if the market is in an uptrend, well, you look to buy the dips, you look to buy breakouts. If the market goes into a high volatility environment, you can look to fade the highs, fade the lows, right? If the market goes, for example, downtrend, you can look to sell the rallies and stuff like that. You have to adapt accordingly to market conditions as market conditions change. You can't just force that one pattern to scalp the market. It doesn't work that way. Number two, as a scalper, you will specialize only in a few markets. The reason for that is because you just don't have the bandwidth to trade 40, 50 markets, right? I would say at best you can just trade, 1 to 3, 4, 5 markets. That's pretty much the max you can go because you will really watch the price action, understand the intricacies, right, of each individual markets that you're trading. And trust me, right, different markets, they have different behavior. For example, do you know that the pound against the dollar, okay, it's a trending market. What this means is that whenever price breaks above the previous day high, it tends to continue in the direction. And markets like Aussie Canadian, it's a mean reverting market. Whenever price breaks above the previous day high, it tends to reverse lower from there, right? This is statistically proven. You can do a backtest and run it and you'll see what I mean. So different markets, they have different behavior. And as a scalper, it's important to understand the behavior of the markets that you are trading. Okay? Number three, transaction cost is something you have to pay close attention to as a scalper. I know some of you who trade Forex think, Reina, that there's no transaction cost in the Forex market. Yes, there is, and it's in the form of a spread. Right? There is a spread. So let me give an example. Let's say you trade euro dollar. Right? You have a 5 pip stop loss, a 5 pip target profit, and a 1 pip spread for your trades. And in the long run, right, let's say your win rate is 55%. Let me ask you, will you make money in the long run given the numbers I just shared with you? And the answer is no, you won't make money. Right? Some of you might be thinking, oh, Rainer, a 5 pip stop loss, a 5 pip target profit, a 55% win rate, I should make money. But no, if you take into account the spread of 1 pip, if you do the math, right, it's actually a losing strategy. That's right, a losing strategy, a 55% win rate with a 5 pip stop loss and a 5 pip target profit, it's a losing strategy because of the spread. So you must take into account the spread. And if you think about this, right, a 1 pip spread on a 5 pip target profit, that's about 20% of your profit potential that's being paid to the spread. So be aware of this, right? The spread will quickly eat up into your returns. If for scalper, right, transaction cost is something that you can't, not pay attention to. And for stocks, it's even something to even consider more as well, because now you have the spread. You might also have your transaction cost, your commissions that you have to pay on each and every trade. Okay, so moving on, fourth thing, news release. So as a scalper, right, you have to be aware of news release in the market. And it's not common, right, for in the forex market for the spread to widen 20, 30 pips during non-farm payroll. And if you're a scalper, if a 5 pip stop loss, a 10 pip stop loss, guess what? When the news comes out, bam, you're stopped out of your trade instantly, just like that. Okay, so you have to be aware of a major news release that's coming out. And whenever there's news release coming out, my advice is to stay out of the trade and close all positions. Right, don't go into news release right with existing positions because that's like a huge gamble that could stop you out instantly or even stop you out more than what your stop loss is predetermined. Okay, news release. And last thing, the last point, scalping is stressful. If you can't make money on the higher time frame, then it's unlikely you'll be able to make money scalping the markets. Right, think about this, right? Scalping, it's so fast paced, right? You have to make decisions on the fly. Usually within seconds, you have to know whether you're to buy, you're to sell, you're to stay out. Right? It's not like trading off the daily time frame where you have 24 hours a day to think whether should I buy, should I sell, should I scale up my trades, stuff like that. As a scalper, if you're trading off the 1 minute time frame, guess what? After 1 minute, let's say that the candle has closed, are you going to enter right now? Every second that you hesitate is could mean that you're going to miss the trade. So you have to be quick on your feet, right? You have to think almost on the fly, right? Whether should I be entering, should I be selling, should I be staying out, should I scale out of my trades, should I add into my trades, and stuff like that. So this is why scalping is a high stressful endeavor that you are about to undertake. Okay, so hopefully, right, these 5 points, right, will highlight to you the truth about scalping. It's probably not what you are expecting, but rather, you understand where I'm coming from and to help you better decide if scalping is for you. So with that said, I have come towards the end of this episode. If you've enjoyed it, right, give me a thumbs up. Subscribe to my YouTube channel. The link is below. Click subscribe, and I will talk to you soon.